Hello everyone and welcome back to another episode of the Smart Money Show. My name is Naman Akhtar and as usual I'm joined by Ali Suleiman. How's your day going?
I'm alright, bro. It's a hot one, but I'm good. It's been a busy one. Filming at uni though, so it's a bit easier. But how are you?
I'm all good, but yeah, as you mentioned, we're back at the LIBF campus and they helped us film episode 1 as well, so thank you so much to you guys. But anyways, who do we have today, Ali?
Yeah, so first of all, I want to say thanks to the audience, viewers, followers, listeners for the love on the relaunch, for the love on the trailer, and the love on episode 1. Obviously, we haven't done an episode like that before, and it's something we're going to bring every 10 episodes or so with more professionals and more accomplished students around the table to discuss some hot topics that affect the student community that you guys are part of. But as Naman stated, who are we joined by today? Well, episode 2, we thought, let's go back to our roots. Let's talk about who we are. So we're joined by some of our very own team today. Our heads of equities and crypto, respectively, Dylan, Ilett, and Jeremy Okornoe. Guys, how are we doing? Welcome to the podcast.
Yeah, it's great to be back. And obviously, of course, we're filming in person. It's a bit of a new format, which is quite strange. But yeah, looking forward to it.
Yeah, I'm excited for this one. First one in uni in person with everyone here. So, excited. Let's go.
Yeah, 100%. Well, listen, for the viewers that don't know, obviously, Dylan and Jeremy have been part of the team since we launched in February 2024, but we've gone through a relaunch, we've gone through a rebrand. So I'm going to ask you guys to reintroduce yourself to the team. Jeremy, let's start with you. Who are you?
Yeah, so I'm Jeremy Okornoe, second year student at the London Institute of Banking and Finance now. I'm very interested in crypto markets, so I've taken on the Head of Crypto at the Smart Money Show now. And yeah, I run my YouTube channel and I also manage my portfolio for about 3 years running now. So yeah, essentially that's a quick rundown.
Yeah, I think you've been very modest there, bro. So I'm going to add to it. So Jeremy is he's a king in the crypto game as a student. He's got an extensive portfolio of knowledge when it comes to successfully navigating crypto markets. But as he stated, he provides advice and guidance to investors and clients via his own social media channels and own businesses as well. Dylan, your turn. Who are you? Tell us about yourself.
Yeah, so I'm Dylan Ilett and year 2 student at the London Institute of Banking and Finance. I'm also an incoming summer investment analyst at WTW, Willis Towers Watson, so really excited for that for this summer. And yeah, I'm the Head of Equities of the Smart Money Show, managing our interns, creating research reports, obviously appearing on monthly podcasts. So yeah, really looking forward to get back started again.
Very cool, very cool. Well, the aim of this episode to quickly talk about before we get into it as we normally do. So we'll be diving into Dylan and Jeremy's journey from growing up and early interest in finance to their career aims and goals within finance as well. But we'll also explore their expertise, the current state of the economy, with some specific focus on crypto and equity markets respectively, of course, plus explaining to our audience what they can expect from our crypto and equity research teams in the near future. But also, this is the founding team of the Smart Money Show. And so we're going to talk a little bit about our combined experiences, about who we actually are, as well as some anecdotes about experiences in the student life. So Naman, do you want to kick things off?
So I'll start with you, Jeremy, then. What was it like growing up and what's your education journey been like?
So yeah, growing up, I guess it was very active, I would say. I actually grew up in Ireland. And I came to the UK when I was about 9, and I've always been playing football, so been busy with that essentially. And as I grew up, started to mature on things, and now I'm in finance, so that's how it's going.
Sweet. Do you miss football?
I'll say no, actually.
Really?
I was very good at football, but
yeah,
I didn't have that deep passion, I would say. So
did the gains in trading make up for it?
100%, 100%.
Good answer.
So,
good answer.
I guess I'm doing what I truly love now. I'm very good at what I do. So, I guess you love what you're good at.
Yeah. And vice versa. Good at what you love as well. You were an ex-footballer as well, Dylan, and you like to consider yourself a good one, but I still think I'll smoke you in Power League. But anyway, talk to us about
We'll see in the summer.
Talk to us about what it was like growing up for you as well.
Yeah, so similar to Jeremy, obviously I played football, and that sort of took over my education. So I never really focused in school that lot. I was always thinking about in science or maths, I'm really excited for training after school. So I always had the belief that I was going to be a professional footballer one day, but obviously that probably does come down to naivety of the young age. So when it came to A-levels, I sort of came to the decision I needed to pack things up, and this was due to different reasons. First of all, falling out of love with the game for various reasons, arguments with coaches, injuries, and also understanding that I need to align my skill set with my actual career. And that's why I chose finance, and then A-levels became a much more sort of serious aspect to my life, where I studied much further and obviously made it to the London Institute of Banking and Finance, and hopefully beginning a very successful career in finance. Yeah.
So, but then what about you, Joey? So your like career goals whilst you were growing up, I know of course right now it's finance focused, but then growing up, what was it like for you?
Yeah, so for me it was very similar to Dylan. I was fully focused on actually becoming a professional footballer. I played at a few professional clubs, so Northampton Town, I was there for a bit, and I was at MK Dons for a very long time actually. So I guess as I got in towards the under 15s, 16s, where you get your scholar and things, I started to pick up a lot of injuries. It sounds cliche, but it literally is what it is. And I guess once you pick up an injury, to come back and play the same is completely like down to your passion, I believe, and of course just other external factors. And at the time, I was reading a lot of books and just broadening my mindset, and I just stumbled across finance, and like ever since then, it's been history, really.
Yeah, I mean, we used to ask a question like, would you change anything if you could go back, to a lot of the guests? We stopped asking that because I think a lot of them used to say that they wouldn't change anything because like the mistakes and regrets brought them to where they are today. So as you say about all the footballing and stuff, and even for yourself, you wouldn't be sat on this table now, head of equities and crypto respectively, if you know what I mean. Well, listen, let's move on to Everywhere Finance podcast, your interest and start in finance for both of you. So Dylan, I'll start with you. Do you remember what sparked your initial interest in finance, and how did you like start exploring the industry?
Yeah, so I mean, even when I wanted to be a footballer, I was always motivated probably by two things: money and success and winning, being competitive. So I always thought one day I would own my own business, and I used them terms at age 14, own my own business. And I never knew what, but I always had visions of driving a nice car, as every single teenager does. But it really started from my granddad, actually, who self-employed, he's owned business, and his retirement, his pension is in stocks and shares that he's invested himself, and he almost drilled that into me from the age of 13, 14. I remember we'd go to watch football games at Peterborough, and we'll be in the car and he'll be telling me about what a dividend is, and 13-year-old me was trying to pretend like I knew what it was on about, but I didn't. But eventually he was waiting for me to ask that question. So granddad, how do I get started? So at 15 years old, I opened up a junior ISA, junior individual savings account. Had to open it through my parents, and basically I managed it. And started off with really small capital at first, and I made many mistakes. But I started to manage that, and I realised that I really had a passion for this. I wanted to know more about how markets moves, how corporate actions might affect a stock on the market. What's happening in politics, how will that affect a certain sector? So all of these things sort of sparked an interest in me. And then once you start to watch the films Wolf of Wall Street, or you start to realise the money in it. And as I said, that comes back to
the lifestyle.
And the lifestyle. Yeah. So that sort of it all combines together. So a bit of a push from my granddad, my initial motivations, and then my inner skills and capabilities all together sort of combined, and that's how I've got where I am today, basically.
I think I want to pose the same question to you as well, Jeremy. And obviously what sparked your initial interest in finance, we'll get onto it as a career, but then also when did crypto come into it as well?
So I guess this came near the end of year 11, so COVID time. So we all know that when we were finishing school, we had the pandemic actually come, and this was like a time where you had a lot of spare time to reflect, and I was just essentially using time to read books and talk to some very smart people that I hanged around, and essentially like you are who you hang around. So I was interested in football, but I would be hearing them talk about markets, crypto, stocks, since the market was booming, was the hot topic, and naturally off of interest and just reading books, that started to like opened my eyes to what's possible in markets, and I guess that's where it started for me.
But then now, if we want to talk about like the more practical experiences, what was the biggest challenges you guys faced? So Dylan, I'll start with you. What was the biggest challenges you faced whilst trying to understand your respective markets or equities?
I think the biggest challenge really is understanding the psychological aspect of it, and this is something that I really didn't understand at first. And no matter how much of an expert you may be, no matter how many psychological behavioural finance books you've read, you will never ever get it 100% right, and no one will. And when I first started investing, I thought I made some really good picks. For example, like Boohoo. I bought these during COVID, and obviously e-commerce was booming, their revenue was booming, everything was increasing, their dividends were being raised, but the stock was dropping, and that was because of the investor sentiment behind it. So even though you have a good idea and the underlying fundamentals match, sometimes for whatever reason the market just won't agree with you, and there's nothing you can do about that. And I think that it's harder to gain an understanding of that than it is to build a DCF model, to analyse ratios, to conduct any form of technical analysis, fundamental analysis. If you don't understand the psychology behind finance, I don't think you'll go anywhere within the industry.
That's a very good answer. I also want to kind of ask, you had your own portfolio, you had that junior ISA, but then what was, when you first actually started managing it, that first sort of practical experience, what was that like? How did that go? Any expectations that it didn't meet?
It was a mess.
Yeah.
To be honest, now second year student, we at our university, as you know, guys, like we study modules like portfolio management, where you learn about asset allocation and are you underweight in equities based on this benchmark? How are we going to compare? There was none of that, and obviously you wouldn't expect a 15-year-old to have that sort of level of knowledge per se. But it was a mess, because at that age, a lot of people don't realise how much of a bias you may have towards certain companies. So there was a point where I was only buying companies which I considered not cool but exciting. So even though I'd stay away from a company that may be a good opportunity, that the public's screaming to buy or whatever it may be, if I didn't like that company or didn't see myself using it in person, I'd stay clear from it. And it was a complete mess. I made many mistakes, and I'm glad that I made them mistakes at such a young age, because now I'm much more cautious with my investing. Don't get everything right still to this day, and no one will, but I've definitely sort of made them mistakes early, so then now I'm managing much larger amount of capital for compared to what it was before. I'm not as stupid with my investing. I'm making more sort of informed decisions instead of just being biased to products that I would use in real life. So yeah, it was a mess. There was no structure to my portfolio, and I basically just bought anything that I liked. That was it.
So of course, Jeremy, now as we know, it's how volatile crypto markets are. So what was your first practical experience like within the crypto industry?
So yeah, very volatile, and I completely agree with Dylan here, because entering the crypto market, first of all, I was actually chasing gains. I was trying to get rich quick, essentially, and I had no base knowledge of the fundamentals. I didn't know about tokenomics. I didn't know about vesting schedules, the seed round unlocks, all these different things that I found out later on I didn't actually understand. And essentially my whole kind of strategy was to find coins before others did. So I was actually trading on attention, and it was working very, very well during the bull run, since everything was just going up. So if you were just a little bit smart, you would have made a lot of money. So essentially that was what I was doing at a very young age, around 16 as well. So that was 2021. And then of course that's where the market topped, and crypto had a first top, we came down, and then we ran up again, and it created some sort of divergence, which was a massive lesson for most crypto participants, because everybody kind of was euphoric at those times, and there was very few people that were actually managing risk, being cautious, and actually taking the right steps to becoming successful in the market. So I guess after that period, I learned a lot about just how to navigate markets. I kind of understood that fundamentals alone wouldn't give me enough of an edge that I could systematically calculate and repeat. So I decided to delve into the technicals as well in 2022, and I spent some money on some courses and reinvested in myself to kind of upskill my knowledge so that I could avoid these common traps, because I think one of the worst things is you just don't know what you don't know. So that's a massive kind of barrier, I would say, that keeps a lot of people from actually understanding how to navigate in markets successfully.
Yeah, 100%. I'm glad you mentioned courses, because my next question was, and you mentioned reading as well, Dylan. So, like, what resources or strategies do you think helped you the most in developing the expertise? Obviously, now you can both comfortably say, you know, you're an expert in equities and crypto compared to other students as well, anyway. And there's a lot you can still learn, obviously, and markets change a lot. But your build up, I mean, you lot have been in your respective markets for ages now. How did you go from when you first started to now? What strategies and resources helped you the most, Dylan?
I mean, obviously there's the obvious, like reading books and...
Any you recommend?
Misbehaving.
Yeah.
That's a good book. And I think another thing that's really overlooked, and although it's not practical per se, is reading books about the bad things that have happened before. And I think if you know the build up to, for example, the 2007 crisis, 1999 dot-com bubble, if you know the build up to these things, it makes it much easier to spot them things happening in the future.
What's that famous saying? History doesn't repeat, but it often rhymes. Yeah.
And that's the thing. So, like, I mean, one of the first documentaries I watched about finance was on financial crisis. And when I tell you I've watched every single documentary on YouTube that I've found about the financial crisis, it is a joke. But it really does expand your knowledge so much, because it's practical. It's not just an economic theory. It is something that's happened, and you're hearing from the people that were in the crisis, that were affected by the crisis, and you're hearing so many different opinions. You know, it's really like so valuable. Secondly, as well, newsletters. I'm subscribed to about 20 plus. As much short form as possible, just getting loads of different information. And I'd say finally, just doing what you are doing as much as you can, no matter how much you read, no matter how much you research, until you actually put money into markets, your own money, not demo money, your own money into markets, you will never properly understand how to navigate them, because the amount of emotions that 15-year-old Dylan may have had to sell something when it went down 2% in the day, it's different now, because you understand that markets are going to be volatile, but if you can manage that volatility, then you're going to become successful within investing and even trading. So really, it's just about just jumping in feet first and just doing it as much as you can, and before you know it, you start to get more calm, and you can remember, like there's a market correction. Oh, I remember this has happened before. Okay.
How to handle it.
Yeah. Exactly that.
100%. I'm glad you mentioned newsletters. Quick little plug for our viewers and listeners that haven't subscribed to our newsletter as well. Links in description, where we share up-to-date stuff like market recaps, etc., so you can better enter the financial services industry. But Jeremy, that's a quick little plug. But Jeremy, but Jeremy, for you mentioned courses. Any other resources? Any courses you can recommend? And would you go back and do those courses again now?
Completely. I'd say there's so many free resources out there. I'd actually say that YouTube is probably one of the best ways to learn, especially when you're actually starting out, because there's very little barriers to entry when it comes to actually paying for anything. So I used to watch about 8 hours of content per day for YouTube. Like before school, I'll wake up on time and try to understand a lot of things, and just watch as many videos as possible. And the summer holidays as well in 2022 especially, that year was insane. Like I was so obsessed with just becoming better in the markets that I was just consuming a lot of content daily essentially, and the more I watched, the more I learned. And like, you'll still do that amount of research and things and make mistakes in the market. And I think that's I'll add to Dylan's point. I completely agree with it. I'll say experience is the number one teacher when it comes to these markets because, the market essentially, in my view, runs off emotions. You can look at Tulip Dutch Mania chart, which was the kind of emotional illustration of what happened in the 1600s when the price of tulips actually started to go parabolic for some reason. We all know nowadays we don't really value the price of tulips that high, but it just shows how market participants can price any underlying asset based on psychology and different things that happens in the market. So just observing it time and time again, especially even on maybe the shorter time frame window, crypto is very volatile. So these cycles play out very, very quickly. Typically, they take around 4 years. We know the business cycle, it takes some years to play out. In the crypto market, you can observe this happening in about a week or so. So I guess over time, I kind of learned how to use that as a premise for longer term investments and just how to capitalize on opportunities that don't come by very often was one key skill that I had to kind of hone into really start to record some good results, especially in my trading journal.
So you said you got a lot of your resources from YouTube and stuff, especially that summer 2022. There's also a lot of not so good content out on YouTube, right? So how can a consumer or a budding student navigate that? What's your recommendations? Because if you're consuming 8 hours a day, you can't be sure all 8 hours of content are good, especially when you first start out because you don't know who good content creators are. Obviously, Jezza BTC, quick plug, Jezza's Jeremy's YouTube channel Jeremy's YouTube channel in the description. But how do you navigate that?
I just watch them. Essentially, I would watch what they say. There's a common saying, I forgot where I actually heard this, but it's not. They say look at the actions, not the words, essentially. So if they were to call something in the market, I would see the area that they were calling it, why. I'll try to understand the reasons for it. And it's very, in my opinion, I think just being patient, not really acting on information straight away just because it sounds good. Just trusting it but verifying, waiting for it to play out in the market, seeing if the analysis actually played out consistently is one good way to be understanding if somebody actually has a clue essentially what they're talking about, and of course just researching what they say too. So going on different financial websites or just asking people, interacting with other professionals. That's an easy way to kind of just double down on what you've already learned essentially, and kind of verify if what you've kind of consumed is the right thing or the right viewpoint, because maybe you've been given a piece of information but you've interpreted it wrong. So it's always good to kind of just double check.
Essentially. Got it. So don't blindly go into it.
Completely.
Got it.
Yeah, and this kind of goes without being said, but using these online resources especially from YouTube, you can do that for basically every single job in finance. So knowing just within crypto or equities like this episode is focused on, but if you want to go into M&A, you're trying to go into ER, you're trying to go into whatever it is within finance, there's always free content on YouTube that you can use. No need to pay thousands of pounds for some courses.
Like us.
But I guess this is a nice point to move on to the next section of the episode. So talk about more of your guys' longer term goals within finance, because of course right now we're just students. So Jeremy, I'll stick with you then. So where do you see yourself in 5 to 10 years within this industry?
So within crypto right now, I'm currently managing about a 6-figure portfolio. I don't really disclose numbers too much because I don't like to essentially talk about it. There's lots of hacks going on in crypto and things like that. But I have a few friends that have hit the 8-9 figure mark already, and it's quite inspirational to see. So of course, money is not the kind of end goal. It's kind of like a scoreboard. I kind of view it like a game, and in business, you always want to kind of strive to be the best, and you want to kind of essentially, replicate what others are doing and kind of put your twist to it. Just try to get the highest score essentially. So I guess at the minute I'm just currently focusing on that, gathering data too, and just trying to maintain consistency, because the markets, you have to be very, very disciplined, and you have to have a lot of awareness of the context, because things can change quite quickly, and if you're not kind of prepared for that, you could definitely see your portfolio have some wild swings, which isn't the right thing to do. You have to be very essentially, like, the best way I can describe it is risk managed. You have to be on the ball, and I think just maintaining my momentum now since January, I've seen some drastic improvements in my own kind of decision making. I think just building upon that and kind of recording the whole process is my kind of next steps for the next 2 years, definitely.
And just one more on top of that, just based on your response, is you see a lot of finance students, especially in this university where we all go, apart from the mine, obviously, the London Institute of Banking and Finance. A lot of students are like trying to get internships and then trying to get a grad scheme or whatever, and kind of make themselves valuable to an industry where they could be part of a firm. Or like whether it's like, as Naman said, M&A, equity research, or the buy side or whatever. I'm gathering that's not your aim. Would that ever be your aim? Was it ever your aim, or did you always want to kind of build something independently?
I was quite open to everything in the first year. I was definitely not. I didn't think it was quite wise to close off my options so quickly.
Yeah, 100%.
But yeah, I just guess speaking to different people, doing what essentially I kind of see myself doing and living the life that I kind of see myself living. I've got a clear picture of what I have to do, and I guess it's a commitment, so I have to kind of sacrifice in other areas, and I guess I don't necessarily think I'll be able to balance, applications and all these different things. As you guys know, they can be quite time consuming.
100%.
And you have to be committed. You guys know about that. So I kind of made the decision very, very early that I wanted to hone in on what I do best and just kind of create my destiny.
I get what you're saying.
Yeah.
And final question on that, sorry, is so do you think maybe you'd be open to potentially going to, so let's say in the future, we know crypto's booming, it's getting bigger and bigger and bigger, the industry just as a whole, and like the people that are working within it. Do you think, let's say in like 5 to 10 years time, as Naman asked, if there was a big firm that said, right, we've got a crypto division now, you know what I mean, like a division dedicated to just crypto, and would you like want to go and work for that division, or would you again prefer to like build something independently, keep working independently within the markets? I know it's a weird question, but do you know what I mean?
Yeah, interesting one. You never know what the future holds. I guess at the minute I am kind of working with other individuals in crypto, especially, for example, some content creators I used to watch and things. I'm kind of helping them out here and there, and I'm kind of seeing how things run behind the scenes when it comes to managing different investments, OTC deals, things like that. So I guess through that process, I might be able to potentially talk to some teams and see if I could learn new skills, even to maybe build something of my own or just contribute to a firm too. So I guess things are changing every week. We had the AI agent run not too long ago. We had a lot of things happening. So technology is kind of advancing by itself, especially with AI. So I think in the next few years, there'll be a lot of positions that we think will still be there, and they'll be quite gone. And I think just positioning yourself to be kind of fine regardless is kind of my main goal. So I guess that's kind of my focus, and I don't know what the future holds. So potentially that might be the case, but just taking it week by week, I guess.
Yeah. No, that's a good way to like keep your options open. I think that's good advice. In my first year, I was like, sell side just for me, and then I did it in spring. I was like, open that buy side. So closing options too early is an issue.
Yeah. So Dylan, of course, now yourself, what's your personal plans for the next 5 to 10 years? Where do you see yourself within the industry?
Sort of mirroring what was said before. Like, I don't want to put a restriction on it. My goal beyond 10 years is to own my own firm in my name within finance. And I know in order to achieve that, first of all, I need to gain as much of experience as I can, and a diverse range of experience, not just to one asset class in terms of equities, which is why I'm so excited to go to WTW this summer, because I'll be covering private equity, fixed income, derivatives, equities, commodities. So that's going to be exciting, where I can cover a range of asset classes and get a broader context of how the market works. But secondly, in such a competitive environment in London, we're literally in the centre of London right now, you need a fantastic reputation. And for me, that is definitely my main goal, is to build my reputation as much as I can, being seen as much as you can on LinkedIn, being seen as much as you can in even newspaper articles. Like, we've had guests in at LIBF, and we've had guests on the podcast. Yeah. And sometimes you go on the Times and you'll see one of their names in a opinion piece. Something like that, along them, building as much reputation as you can, getting your name out there. So when you start a firm, in your name, people know who you are. I mean, like, for example, I forget his first name, but Molius & Co., the founder of that company, used to work for Goldman Sachs.
Yeah.
And he worked his way up. And now they're competing with Goldman Sachs on deals.
Very interesting. That's a good story.
Yeah. But, building up my experience as much as I can. And again, it's not a rush to get promoted. Everyone's sort of in their own lanes. But I ideally would want to be as the highest position I could possibly be in 10 years' time, whether that be VP level, whether that be senior associate level, whether that be director level. Again, this is all sort of very hypothetical, but I'd say build the best reputation as I can, experience as much as I can, and achieve as much as I can.
Cool. So I mean, building like a firm in the finance industry is like, I know me and you, Ali, we were on this coffee chat with someone who was building their own firm. They did years and years out of firm. They were building this, and there's money ready to be deployed. It's just, can you gain that trust? And the way they had a lot of contacts ready was because throughout their 20-25 year tenures, they built their trust reputation. So that's you've got a strong alignment in what you're going for. But then, kind of on that note, then, and sticking with you, Dylan, what motivates you to continue pushing forward in this industry?
I mean, anyone would say this is creating wealth for generations below. But away from that is, I like to think that I'm someone with an alternative opinion, and obviously I haven't decided on what exactly my firm would do yet, or obviously I'm going to learn new things as we come across, but I want to be known as someone who has an alternative opinion and will share it. And to me, that's what motivates me, having creative ideas, thinking outside of the box. And obviously that's what would drive me to want to be self-employed and want to have a reputation. So I'd want to have a reputation for being different in the market, just not another number, just not another VP, just not another director or analyst. I want to be seen as someone who can hold their own in a room with anyone they're in with. And I think that is something that definitely motivates me, sort of just continuous progression in a way.
That's a very good answer. Jeremy, unfortunately, you've got to answer that as well after that one. So what motivates you to continue kind of pushing forward in your sort of industry and your kind of roles and everything else that you do?
So there's a multitude of verticals that can go down, and essentially I guess the main one for me would be definitely family. I have a big family, and I definitely want to be the person to kind of provide that freedom, and I guess this whole thing I'm doing, I guess it's just to have that freedom to do what I want, when I want, where I want as well. So there is that as well, and of course I'm doing what I love, so I guess I have a passion for what I'm doing, so I'm always kind of motivated. I'm never finding myself kind of demotivated for long periods of times.
That's good.
I'm kind of obsessed with what I'm doing, so that kind of helps. And then the longer term goal would be to live a life of freedom, not just for me, but of course my loved ones too. So that's a massive motivator, in my opinion. That's
very good, man. Let me ask you, you said obsessed, you must be working a lot. Do your parents ever have to tell you, listen, stop working? Because me and Naman have been there, obviously with the podcast and stuff. We get too sometimes wrapped up and we'll have the laptop out all the time, and they're like, listen, just put it away. You must have that sometimes.
Yeah, essentially I'm just the type of person, I have a lot of ideas sometimes, so I could plan, for example, to only work a little bit, maybe, go to do some shopping or something with my mum, and then I'm kind of busy when I used to live at home. So that was interesting kind of experience where she kind of understood that, like, I love what I do, and she kind of supported it, so I'm always appreciative of that. So
that's good. It's harsh reality, isn't it?
Exactly.
Yeah. Well, I actually want to ask the question quickly to you, Naman. What motivates you? Because I've heard two good answers, and I got an answer, I think, but what makes you to continue pushing forward in your finance career, as the question's written on our iPads?
I mean, that's cheating. I didn't expect to be the one interview today, but I guess it's just success, basically. Like,
yeah,
I'd say it's a shame me not maxing out my potential, as in or it's a shame me not maxing out my potential, but you, both of our guests today, if you're not pushing yourself to your extreme, and you've lived a life where you haven't really, like, you've got the capability to work in the buy side, in finance, doing whatever you want to, but you haven't done that and you haven't followed your dream. I think that's a big shame. So for me, it's just, it's 30 years down the line, I'm doing a job that I hate, it's just not what I want to do. I think that's just like a big shame. So yeah, I guess a bit of a wishy-washy answer, but yeah, for me, the main thing is just that I want to see the best of myself, because there's only you only live once, don't you?
Yeah.
Like, within this world. So yeah, that's basically my main motivator. But then I guess I might as well pose the same question.
Yeah, no, I mean,
what motivates you?
yeah, no, I mean, what you said, Jeremy, big time. I mean, both you said, to be honest, but obviously the whole family thing, big time, as in, like, just being the one to, like, level up the family in a way. You get what I mean? Like, just keep it moving forward, etc. Because just like to take it on my shoulders, etc. Being the only son as well helps, or doesn't help, which way you look at it. But also, I think faith is a big one. I mean, obviously, any faith is like your faith teaches you to do something that provides value to others, right? Or just like for me personally, it could just be, I feel like doing the podcast, or like being part of a firm, or like a small cog in a big mechanism, or whatever, providing value to other people. That's a big one for me as well. But I think it's a combination. I think we can all say it's a combination of all the things. But yeah, next section, let's move on.
So the two individuals we have today are our equities and crypto experts, and of course there's so much more projects we are running after our rebrand to the Smart Money Show. But one of the main things will be our monthly economic recaps. So, and which of course we'll have the ball running from the next one onwards. So yeah, I guess I'll pose you guys a question then. What's happening in the global economy right now? Jeremy, I'll start with you.
So since February, I believe the second week of February, we started to settle in. Inaugurations passed us now, and Trump started to talk about tariffs, which just shook markets across the globe essentially. We had Zelensky actually meet Trump, and that was a very interesting watch actually.
Yeah.
There was a lot of 5D chess going on, so it was very, very interesting, because it was just like that kind of set the tone. I mentioned this on my channel, and I've just been kind of conserving capital because not to talk about what I'm doing, but thoughts on the market. So I guess it's not expected that we can easily just V-shape out of here, because there's a lot of repercussions for some of the moves being played.
There's a lot of variables, isn't it?
Completely. Yeah. We're seeing yield curves invert. We're seeing so many kind of worries. Trump wants to kind of refinance his debt a lot cheaper, and Powell is not budging. So of course there's a lot of things going on, and we have to kind of be patient is the best way I can kind of describe it. So they say if America sneezes, the world catches a cold. So I kind of...
And we've seen that, man, big time in the last few months, big time.
Completely. So I kind of just set my eyes on what Trump's doing, because I guess he's kind of setting the tone for markets across all regions.
Yeah. Now that Zelensky chat was mad to watch. I watched it live. It was crazy to me. It's the world we live in now, though, isn't it? Dylan, what did he miss out?
How uncertain the markets are at the moment. but then how many buying opportunities there are. I mean, like I said, like earlier in the podcast, we said 15-year-old Dylan would freak out, but I've topped up holdings in the US, topped up holdings in emerging markets, topped up holdings in the UK, because whatever comes down, it's going to come back up eventually, and it's proved by that. And I mean, on the topic of Trump, no matter how often people may think they know who he is as a person, he surprises us every week. We just when he thinks he's going to finish off those tariffs and send them up, no, he's going to stop. And I think a major thing to see in the markets at the minute is how much stronger Europe is starting to become. They have a long way to go. For example, the UK has a long way to go, and we've been talking about this for a long time now. Like, the UK is severely undervalued, and I think it will stay this way for quite a long time. There's so many buying opportunities, but the issue is not enough people see it as that way. And obviously that's what's going on at the moment. But when it comes to Europe, because of Trump, he's really created a divide in sort of NATO, and Germany has a much better relationship with Keir Starmer at the moment, and France, and you almost get the sense of Europe are going to start fending for themselves on a geopolitical level and also an economic level. So this will be really interesting to see how that plays out, because it would be a major shame, especially for the UK, if that relationship between the US and the UK ends up falling apart, because they've carried us on their backs for a long time now, I think, in capital markets. So I think if that all comes crashing down, it's really bad news for the UK. No matter how undervalued we perceive the UK to be, there's just not enough confidence there.
Yeah, and it's kind of funny in a way, because the whole narrative 2-3 months ago, we're talking end of last year, it was flipped there compared to where it is right now. The US was booming, we had the whole AI driven boom, and then the build up to Trump, and then now of course the UK and the EU were performing weakly, but then now that's kind of in a way flipped on itself. But talk about more the driving factors of markets. So Jeremy, we know that Trump is pro crypto, but then crypto markets overall, they seem to have a different direction as of recently. So what do you think is the main driving forces of crypto markets right now?
I'll say of all risk assets, is global liquidity is the number one thing that I'm looking at the minute, because liquidity drives markets, in my opinion.
You said that a million times. Yeah.
So many times, and it just plays out time and time again. So I guess that's one thing that I urge people interested to just observe. Go and check every time liquidity starts to take a turn. Then you'll see that the markets respond quite positively, and vice versa. When it starts coming down, the markets kind of contract. So we had the FOMC meeting not too long ago, and Powell actually mentioned that they're going to start to reduce the reduction of the Fed's balance sheet. So they're going to start to look to reduce or stop reducing the assets on the Fed's balance sheet, which means that stopping selling. So I guess potentially later down the year, times might be bright, but again, that's not actionable at all. It's just an observation, and I guess we have to just see what's happening. But I guess just relating to your question, Aman, the number one thing, in my opinion, just looking at the economy as a whole, I would say there's a lack of liquidity. Just jumping onto Dylan's point about the UK market, so the FTSE undervalued companies, I guess there's no liquidity ready to be deployed in markets. The things are kind of contracting, so not many sectors are going to catch a bid. These things take time to play out, so once liquidity starts to actually flow back into markets, maybe a symptom of a rate cut, then potentially we may see some sectors start to boom in different regions.
Yeah, so Dylan, now taking a step back and looking at more overall trends, what trends do you see in equity markets or overall in the economy right now?
Yeah, so I'll be a bit different. I'll start with emerging markets. they're really trying, especially with Trump at the moment and all these tariffs being imposed, to get away from the US in terms of their reliance. And we've seen a lot of trends of sort of de-dollarization in emerging markets. And for example, economies like India, even China, who have been struggling over the past few years, they always manage to come back. Nigeria, even Mexico have an opportunity here when it comes to tariffs. So I think we will start to really see a trend in emerging markets over the next sort of 5 years, because I think if Trump continues with these tariffs and sort of his hostile demeanour and sort of rhetoric towards these other world leaders. I mean, you see the way he spoke to the president of Norway, the prime minister of Norway about Greenland. Whether you believe he has a point or not, you don't handle yourself in such a way in diplomacy. So I think the US sort of losing its hold over certain nations and continents is definitely a trend that we're starting to see. And on the topic of the US, obviously with the US stock market correction, this is a really tricky one to see, because technically we are in a bubble in terms of valuations. When before it all dropped, we had some for Magnificent Seven reaching 80 times earnings, which is higher levels than the dot-com bubble 1999. Then the issue is here, there is an underlying value within AI. We just don't know how big it is yet. So where is it going to be used? And the issue is, for the bigger and the more overvalued a company may become, for example, Nvidia, the smallest of changes, they might beat analyst expectations on their quarter 3 report or their quarter 1 report. But if they don't beat them by considerably more, they're going to drop, because the market reacts a lot more to bad news. And this is something that didn't happen as often 10 years ago per se, because the implementation of social media, information is so available now, and there are so many retail investors in the market. I mean, don't get me wrong, institutions still dominate it, like they did 10 years ago, but there's much more retail traders in the market where they act faster on information. So Nvidia not beating earnings by 10% higher than what analysts predicted means the stock's going to take a drop, and obviously we've seen a correction, and that's derived from politics and the world economy, but it's also because of overvaluations in the US stock market, and it's been coming for a long time. So that's a trend we're going to see, and obviously I spoke about the UK market, concerns over that. I think there's a long way to go. Obviously Rachel Reeves announced that she wants to sort of limit the restrictions that the Competition and Markets Authority can place on companies in terms of even M&A deal flow. That's a big driver. So we've got a long way to go, but all over the world there's so many different aspects from what's happening, and it's all centred from Donald Trump at the moment.
Yeah. Well, I'm glad we briefly touched on the crypto equity markets and the economy, but as Naman said earlier on in the episode, there will be monthly recap episodes, with the first one happening at the start of May to cover what's happening in April. Obviously a big time for the financial year and for markets, etc., but we'll be covering all of this and more in a dedicated episode every month to crypto and equity markets and the global economy as a whole. But I do want to talk about, obviously the Smart Money Show is growing to be more than a podcast. We've got newsletters now, we've got 20 interns plus working for us, and some of the stars in our crown, not stars, but jewels in our crown, are our crypto and equity team. So I want to ask you guys who manage our analysts, give reports and articles, etc., what is the core focus of your teams for the next few months at the Smart Money Show? Jeremy, your crypto team, your crypto analysts.
Yeah, essentially the crypto team and we're doing crypto news every week. We're actually looking at the macroeconomy as well, since that's a very big factor. We're doing personalized videos on a portfolio update as well, alongside the news, of course, and we're actually bringing some monthly reports. So we're going to be publishing our data, looking at different on-chain charts too, and analytics to help us actually navigate the market and actually get a understanding of what's happening at least. And yeah, essentially we're very excited, and that's the main trajectory that the crypto team and I are actually going down.
Sick, man. And obviously the equity team's doing the same sort of things, but what sort of topics are you guys focusing on in the near future, and where do you hope to take the team?
Yeah, so we're focusing on a lot of opinion pieces. For example, for US market correction, or we might cover a specific company story which we may find interesting that has been published in a certain light that actually should be reported differently, in a different light, for that alternative opinion, obviously, that I've said before. And obviously we're managing a portfolio of equities where, you know, it's more of a practical aspect, so we will be sharing our thesis behind our investments, and whether it goes right or wrong will be entirely transparent, and we'll explain why it went wrong, and hopefully that will show to the viewers that, you know, these things do happen, but the most important part of it is to realign your strategy, take a step back, realise where you went wrong, and then refine your strategy again and your technique into the future. So, you know, a mix of sort of research and newsletters, but also really bringing that practical aspect of it, so putting our opinions into practice and seeing what happens.
And I think that's just like a great point to say that with the directions the Smart Money Show is heading in right now, we aim to provide our audience, you guys, with as many different possible forms of consuming content. And as our experts have mentioned, there'll be articles, the demo portfolio, then there'll be newsletters, then there'll be the monthly recap episode. So as much content as possible is going out to you guys, and backed by our team of 20 interns. So yeah, moving on to the last section of the episode, we're just going to finish up with a few tips on for students and aspiring finance professionals. So I'll start with you again, Jeremy. So looking back at your university journey, what are you the most proud of?
I'll say I'm the most proud of actually trying things outside of uni, and I guess sticking to just coming to university and actually completing my exams and things, alongside things I'm actually involved in outside of uni. I guess in my family there's only quite a few people with uni degrees, so for me to actually come to uni and do a finance degree especially is one thing that I wanted to complete for them. So I guess, that's one thing I'm very proud of. And of course, me maintaining the kind of passion outside of uni for finance as well is something that I'm very proud of, and I look to continue to do.
Love that, Jeremy. Long may that continue. Dylan, you mentioned a lot on this episode, sort of like younger self, etc., etc. But if you could give your first year self one piece of advice, what would it be?
I would say in first year, obviously, as you guys know, I was really sort of moving towards the whole sort of investment banking side of things, like mergers and acquisitions, deal advisory. And I would say the one thing that I would go back on is understanding where my actual traits, skills and qualities lied, because my qualities do align more with investment management, asset management. And if I'd realised that sooner, not only would I perhaps progressed more. Not that I consider myself in a bad position now. I'm very happy in the position I'm in. But if I would have realised that much sooner, maybe I could have picked up more skills. Maybe I could have met a few more people within the specific industry that I want to move into in terms of finance. So I'd definitely say probably experiment a lot more in first year. That maybe if I did that, I would have realised sooner that where I wanted to go is where I'm heading to now.
Well, yeah, Dylan, great answer to that question. We never really ask students that sort of question, so it's great to have that answer, and for myself, Jeremy, to reflect on your journey. But the whole episode has been amazing. Always a pleasure to talk to you both, and looking forward to continuing to talk to you guys monthly on, as I said earlier, the economic recap episodes, where we'll dive into markets in a way that no one else does, and from a student's perspective. But of course, anything that you've heard in this episode, it says it in the description, none of it is financial advice, so don't take it as such. That's just to cover ourselves, but we really do hope you enjoyed that episode as much as we did. And if you're viewing us on YouTube, watching us on YouTube, and you haven't subscribed already, then be sure to do so by hitting that subscribe button right at the bottom of your page, and you won't miss any of our weekly uploads and our medium form plus short form videos. If you're listening to us on an audio platform, you can still rate us, leave us a comment, follow the show, so you don't miss anything on there. And our social media platforms are in the bios of all of our long form video and audio platforms, so be sure to check them out, where we announce events that we're speaking at as a team, and some hiring posts that we put out, so you can join the team and be part of the Smart Money Show. But as usual, thank you so much for watching and listening, and we'll see you next time for another episode of the Smart Money Show. Thank you very much, and stay tuned.